Understanding how to read the higher time frame is one of the hardest things to do as a trader, but I'm going to show you in 10 minutes exactly how I do it on a day-to-day basis. So the concept that I use is called CRT, and that stands for candle range theory. This basically means that we identify a candle as a specific range that we are dealing with. Now, a lot of people call this the dealing range. I think ICT traders call it a dealing range or something along those lines, but this is how I understand it. So what is CRT and how do we find the best CRT candles? So as you can see here, let's just call this a daily candle, okay? So we have liquidity at the top. As you can see, I've marked it out, liquidity above and liquidity below, okay? The best CRT candles are big, bulky candles that have small wicks on either side, okay? But the main part of it, it's not about the wicks. It's all about just being a bulky candle that identifies some sort of a range. So what do? We mark out the top and the bottom, and we mark out 50% of the range. So what are we looking for in CRT and when we've marked out these ranges? So we are looking at this as with the potential consolidation. We are looking at manipulation to happen above or below this candle, and then a distribution to the opposing side, okay? Or 50% of the range. The first thing that we look for when we are identifying a CRT candle is the time frame that we're on. So we only look, and how I've learned anyway, is I only look for monthly, weekly, and daily CRT candles. That is it, okay? This is strictly for the higher time frame to understand how to set up your trading plan, and then you drop to the lower time frame to get your entries, okay? So in this instance, we're on the daily, and we can see that this candle is a big bearish candle, and we've marked out our liquidity. So we're waiting for a manipulation to the downside to then buy up, or a manipulation to the upside to then sell off. So one of my mentors is called the author. He's got a group called the Renaissance Group, so go and check that out. He's got a really good quote, which is, if you know where the monthly is going, you know where the next 4 weekly candles are going. If you know where the weekly is going, you know where the next 5 daily candles are going. If you know where the daily is going, you know where the 6 4-hour candles are going. And I know that a lot of you might think, oh, isn't that pretty obvious, like, because that's how many candles there are in each of these bigger candles. But really think about what he's saying here. Okay, if you know where the monthly is going and you've seen price manipulate at the top, you now have 4 weeks to sell all the way to the bottom of the range. And now you can understand. You don't need to understand about break of structure, any of this stuff, right? You don't need to guess. The strategy is based on it's manipulated at the top. Now we send it all the way to the 50% of the range or the bottom. That's it. It's that simple. So what does that look like? And what does a manipulation candle look like? So I'd like to stick to the daily time frame. That's kind of like where I see you guys living, and that's the bread and butter. Obviously you can look at weekly and stuff like that once you start getting a bit better, but for me, I like to practice on the daily because I'm an intraday trader. I take about 1 to 3 trades a week, and all I care about is week in, week out. I don't care about, you know, the 3 monthly, the yearly. I don't care about none of that. Okay, so let's imagine that both of these candles, these examples, are a Monday CRT high and low. If you're part of the 9559 FX mentorship, you'll understand why I've chosen Monday as our range, okay? So we've got a CRT high and our CRT low, all right? We want to wait on the daily for a price to manipulate at the top and close back below. Because what does that mean? It means that we have taken liquidity from the top of the range, and it only means now that there's liquidity at the bottom of the range that needs to be swept. So wick above, close below. So you have Monday range, Tuesday wicks above and closes below. We now have Wednesday and Thursday to sell all the way down to the bottom of the Monday range. And it's that simple. Now let's look at the buy example on the right. We have Monday's range, which is the top and the bottom of the candle. Tuesday wicks below and closes back inside of the range. Wednesday, what do? We buy, looking for to carry on the distribution, okay? So let's look at a example of this now, of a Monday range CRT example, okay? So we identify our range. We've marked out here the CRT high and CRT low, as you can see. And what do we get? Tuesday consolidates, right? And overall, we're bullish because we're making higher highs and higher lows, okay? So we're only really looking for buyers right now. Wednesday manipulates Monday's low, okay? And we trade it all the way to the opposing direction. That's it, or to 50% of the range, okay? Let's take another example that's slightly different. So Monday creates a range. We're expecting Tuesday or Wednesday to make the high or the low of the week, okay? I think there's a stat that says that 60% of the time, Tuesday or Wednesday over the last 4 years on EU and GU has made the high or the low of the week. So based off that data, we can anticipate that Tuesday or Wednesday might manipulate to the downside. So we got a big bulky candle here, all right, from Monday. We mark out the Monday CRT high, the Monday CRT low. We wait for Tuesday. Remember, we're waiting to spot the manipulation. We're not entering on the manipulation, we're waiting to spot the manipulation, okay? That's what you want to do at the start if you're just starting out with CRT. So we wait for the manipulation, but it doesn't close back inside of the range. So what are we doing? What trade are we taking? None. We wait for Wednesday. Wednesday manipulates Tuesday and closes back inside of Monday's range. So what does that mean? Now we have taken liquidity, and now all we have is liquidity to the upside. So now we're looking at Thursday to open, right? We catch a trade all the way up to the high. So you've got Thursday and Friday to catch trades. And that's pretty much the strategy in a nutshell, you know? If you're just starting out, I would use Monday as the Monday range example. It happens quite a lot. Monday tends to consolidate, Tuesday or Wednesday tends to manipulate, and Wednesday and Thursday tends to distribute. Friday just tails off, okay? Power of 3. If you know, you know. And that's pretty much it. But let me show you one final example. So we can see that we're kind of bearish right now. We're in a consolidation, right? And right now, most traders wouldn't understand where we're at in price when you're looking at that Monday that I've marked out here, right? So we've got the Monday range high and the Monday range low, yeah? Tuesday, wicks above, taking all of these wicks to the left and closes back inside Monday's range, okay? We've got like a double bottom here, which is like a swing low point, right? But you can now use Wednesday to sell to the bottom of Monday's range or even lower to continue structure to the downside. And that would have given you an insanely good risk to reward. But that is pretty much it, all right? As a bit of homework, I want you guys to go away and I want you to make sure you do this and do this with care, okay? Go on backtest, go on FX replay or go on TradingView and just click the, the replay thing and go on the daily time frame. Mark out Monday's range or mark out a candle that you believe is a CRT. Figure out where is the manipulation and where the next candle after the manipulation is going. Over time, you're going to get more and more used to seeing the manipulation after the CRT candle. And a lot of the time, you will only spot the CRT candle after the manipulation has occurred. Okay, and that's totally fine. Don't worry about missing the CRT candle. The first thing you need to do is just understand how price consolidates, how price manipulates and closes back inside the range, and then that's where you catch the distribution. All right, if you know about the entry model and how we trade at 9559FX, then you'll be able to catch these trades completely fine. This is what I want you guys to stick to, okay? Go on to the daily time frame, look for consolidation, look for manipulation, and check what day that occurred on. All right, there's a big correlation between when price consolidates, when price manipulates, and when price distributes, and also when price does nothing. But Friday and Monday are the two best CRT candles. All right, Tuesday is the best manipulation day candle. Wednesday and Thursday are the two best days for distribution, okay? That's it. That's all I need to share with you guys. Go and do the homework, go and test this on a live market, backtest this and find out, what works for you. Some of you guys might find that you only like to do the Monday range example. Some of you guys might find that Friday works better for you, but that's completely up to you. But yeah, that's basically it. That is CRT in its simplest format. If you have any questions at all, please do let me know. Shoot me a message on Discord. Make sure you join the Discord as well. It's a free Discord you can join or sign up to the 9559FX mentorship. Let me know what you guys would like to see next. If you'd like me to do another video on CRT, but I hope this helped and I'll see you guys on the live streams on Discord. Love.